Welcome back to the channel, everybody. My name is Ashwin Soya. What a session we saw today. What a huge rally in general in everything. We saw the S&P up 1.7% today. We saw the Qs up 3.3% today. So just overall, market ripped. Now, and this is exactly what we've been talking about the last 2 to 3 days so far this week, saying that the AI trade is probably going to get rotated back into with those extensions we saw to the downside. And we're going to see money come out of Apple, which sold off to almost 1 to 2% today. But we're going to start off by recapping the ones I've been covering. So first off, the solar trade, which moved nicely today with TAN up 4.5%. We highlighted those dark pool prints that we saw the last 2 to 3 days on TAN. And yeah, finally today we saw the bounce because they got pretty extended to the downside. And along with that, components like First Solar, that's not the ticker, FSLR reported earnings today, up a little bit after its report, almost 7.5% on the entire day. Enphase 2 was up decently today. Now, another one that covered was Tesla. Tesla got very extended to the downside, very extended from its 10-day moving average, and RSI got pretty oversold. We saw that bounce 3.5% today, another positive. Lunar, which I covered again yesterday, was up 7.5% today after seeing a positive RSI divergence, bullish divergence. SNDK, absolute face-ripping rally today, 26% during the session and 3% in the after hours now. DRAM as well, ripped. All the semiconductors, SOXX, ripping. Then we saw, I think LRCX covered for a little bit up. Every single semi just took off. So yeah, that leaves us now with not one more. That is Microsoft. Microsoft 16% up today. But with all that, that leaves us with not many fresh opportunities for the rest of this week, with now names bouncing off so hard off their extensions. The risk reward kind of sucks now on the long side, so we're kind of going to have to wait for a couple of days. But I do think SNDK, SanDisk, could possibly set up for a 3-day bounce short into like 1500. If we get another bounce tomorrow and then a gap up Monday, we could see a push up into maybe the 20-day moving average, and then try a possible day trade short setup or a 1 to 2 day setup where it would run into that and then fade like a nice quick 10% or so. Possible idea there. It's 126. We're waiting for Apple earnings to come out. Want to see what happens there, because I think 130 that will come out. See what Apple does. Another possible opportunity is SoFi, which I already have a position in, but looks like it's shaken out. I mean, it gapped down on the earnings and is shaking out with a hammer. Let's see if it closes well tomorrow, get a proper hammer, and then push up back into the 20s. But now, looking at the index, I would expect the cost to be up like 11 or 12%. Probably limit up tomorrow or today night. The Qs shake out on the 20-week moving average. Pretty bullish sign. More than likely going to see a rally, I would think, next week if this holds like this on a bullish hammer. Even higher volume today on the recovery. So I would not be chasing any gap up, though, on the long side. Now my process kind of shifts where I'm going to hold my longs, which I've been buying the last 3 days for sure, but trim into strength and possibly look for some fade short setups maybe early next week. But for now, sitting still, not going to do anything new the rest of this week. Just either trimming positions or staying put. No extra stuff, because I just don't see the risk reward. I mean, the only trade that I could see where I'd possibly be adding is the crypto trade with something like, let's see, Coinbase, where it's down on earnings, been consolidating for a long time. If it gaps down, possibly recovers and like shakes out to the downside, it could possibly set up for like a trade to the upside, because this feels like this is trying to bottom down here. along with all of crypto, with the seasonally trying to bottom here on the 4-year cycle stuff. SPY was up again, 1.7%. Reclaimed that, and again putting in a pretty shakeout like candle. The correction through time is still going on in this. Yeah, just not really too much to look at from now on. I mean, just focus on holding the positions I currently own. First Solar is one I currently own. Enphase, another position I own. Enphase a little bit higher of a cost basis. I own it in the early 40s, which is down a little bit. But First Solar, I have a good cost basis. I'm in profit on that now. Own that in the early 200s, around 205 to 210. So solid there. Oracle too, moving nicely. Really, yeah, that's about it for today. What I'm currently watching. Just want to see these positions I have currently reclaim back into their moving averages and probably trim some into the declining moving averages, and then see them base a little bit, and we'll see what happens after that. But right now, no agenda for trading the next 1 to 2 days. Just waiting for these things to bounce aggressively, and then possibly look for the short step that I said in SanDisk, which, or some semi name if it, yeah, I said it gaps up 2 more times and then can fade. The 3-day bounce setup. That I'll probably make a video on that in the future, the 3-day bounce setup, on how to execute a trade like that. But one more thing I wanted to show you guys was the software trade. So I wrote this article on Substack June 28th. We covered the software trade, said how ever since cashing out on software stocks on June 1st, which after the run-up, we sold all of it, I've been looking for a new entry on my software stock, on software names like Microsoft, ServiceNow, CRM. And at the end of June, it all looked like they made a capitulation low. For example, Microsoft put in its highest weekly volume in years down at the 2025 tariff lows, and even a part of the March, April lows. So that gave me a lot of conviction thinking that it bottomed for sure. When you see that type of volume and a hammer candle at a strong support, more than likely it's capitulation. And we saw that exact thing now with Microsoft now rallying like 25% or so off that. I mean, from this level. Huge rally. And that kind of tends to show about how markets work when we see market sentiment. People tend to hate this thing. People thought Microsoft was dead down here. Oh, it's a big head and shoulders pattern. It's going to break down. It's going down. Microsoft's dead. Software's dead. You see garbage like that all the time. But how people buy into these narratives and they think, oh, it's over. It's so over. And you see it bounce back then. And now everybody loves it again. Everyone hated it down there in the 360s. And now they love it at 450s. So it's like a course on market psychology and how people just tend to let their emotions cloud their judgment. Another one was ServiceNow and CRM, which have moved substantially off their lows. Even though they were down today, still substantial moves off their lows. ServiceNow went from 98 when we wrote this to up to like 117 before today. Yeah, 117, 118. But yeah, that's about it. Apple down $7 as we talked about. All right, I'll catch you guys in the next video.